Have you ever wondered what separates the wealthy from everyone else? It's not always about having a high-paying job or a secret stock tip. Often the biggest difference is simply starting. The journey to building wealth begins with a single step, and honestly, the sooner you take it, the more powerful that step becomes. Many people wait for the perfect moment to invest. They wait for a raise, for the market to be just right, or for some sign from the universe. But the truth is, the perfect moment is right now. Your future self will thank you for the decisions you make today. The magic ingredient that makes starting early so powerful is something called compound interest. Albert Einstein famously called it the eighth wonder of the world. It's the process where your investment returns start earning their own returns. Think of it like a snowball rolling down a hill. It starts small, but as it rolls it picks up more snow, growing bigger and faster. Your money works the same way. The longer it has to grow, the larger that snowball of wealth can become, creating a momentum that is nearly impossible to stop. Imagine two friends, both investing the same amount of money. One starts at age 25 and the other waits until age 35. Even with just a 10-year head start, the friend who began earlier could end up with double the amount of money by retirement, if not more. This isn't because they were smarter or luckier, it's purely because they gave their money more time to work its magic. Time is the one resource you can't get more of, which makes it your most valuable asset in the world of investing. Harnessing it is the key to unlocking extraordinary financial growth over your lifetime. So, let's reframe how we think about our age. If you're in your 20s or 30s, you are sitting on a gold mine. You have decades ahead of you for your investments to mature and multiply. Every single dollar you invest today has the potential to become many more dollars in the future. This isn't about getting rich quick, it's about getting rich smart. It's about understanding that the simple act of starting, combined with the unstoppable force of time, can pave the way to a future you've only dreamed of. Your journey to wealth doesn't require a fortune. It just requires you to begin. One of the biggest obstacles that stops people from investing is fear. This fear is often fueled by powerful myths that have been passed down for generations. The most common myth is that you need a lot of money to start investing. People picture Wall Street traders in expensive suits making million-dollar deals. They think investing is a private club with a high barrier to entry, but that image is completely outdated. The reality today is that investing has never been more accessible. You don't need thousands of dollars. You can start with as little as $5. Another pervasive myth is that investing is incredibly complicated and risky, almost like gambling in a casino. The news loves to show stories of people who lost everything by betting on a single, risky stock. This creates the impression that the stock market is a dangerous place where you're likely to lose your hard-earned money. While it's true that some forms of investing carry high risk, there are also incredibly safe and reliable ways to grow your wealth. You don't need to be a financial genius or spend hours analyzing charts to succeed. The right strategy is often the simplest one. Let's break down this idea of risk. Crossing the street has risks, but you do it every day by looking both ways. Investing is similar. It's not about avoiding risk entirely, but about managing it intelligently. Smart investing isn't about wild speculation, it's about owning a small piece of the world's greatest companies and letting them grow over time. It's about diversification, which is just a fancy word for not putting all your eggs in one basket. By spreading your money across many different investments, you significantly reduce your risk and set yourself up for steady, long-term growth. The final myth we need to shatter is that you have to be an expert to invest. You don't need a degree in finance or a special license. Thanks to modern technology, the tools and knowledge of the pros are now available to everyone right on your smartphone. You can set up an investment account in minutes and automate your contributions. The goal of this journey is to show you just how simple it can be. Investing is not an exclusive club for the wealthy and the connected. It is a tool for everyone, and it's time you learned how to use it for your own benefit. So what does this journey actually look like? It's not a sprint, it's a marathon. Think of it as building a house, brick by brick. The first step is creating a solid foundation. This means understanding your own financial situation and setting clear, achievable goals. What do you want your money to do for you? Are you saving for a down payment on a house, planning for retirement, or simply building a safety net? Knowing your destination is the first step in drawing the map that will get you there. This initial planning phase is crucial for your long-term success. Once you have your foundation, the next phase is about building smart habits. This is where we'll talk about the practical side of money management. We'll explore how to create a simple budget that works for you, not against you. We'll learn how to identify small, everyday expenses that can be redirected towards your investment goals. It's not about making huge sacrifices or giving up everything you enjoy. It's about making conscious choices and understanding that small, consistent actions add up to massive results over time. This is where you start laying the bricks for your financial house. With good habits in place, you'll be ready to start the actual process of investing. This might sound intimidating, but we will break it down into simple, easy-to-understand concepts. We'll cover things like index funds, which are a fantastic starting point for most beginners. We will also explore the power of automation, setting up your accounts so that your investments happen automatically without you having to think about it. This set-it-and-forget-it approach is one of the most effective strategies for building wealth consistently while avoiding emotional decision-making. Finally, every journey has potential pitfalls. We will arm you with the knowledge to recognize and avoid the common mistakes that new investors make. We'll discuss the importance of patience and discipline, especially when the market gets volatile. Drawing on the wisdom of legendary investors like Warren Buffett, we'll reinforce the mindset needed to stay the course and think long-term. This roadmap is designed to guide you step by step, transforming you from a beginner into a confident, smart investor. Your journey to financial freedom starts right now with this first step. Before you invest in your mindset. Wealth isn't just numbers, it's a way of thinking. Successful investors see money as a tool, a seed to grow. Shift from consumer to investor. The consumer asks, what can my money buy today? The investor asks, how can my money work for me? See a dollar as an employee, earning even while you sleep. This shift is everything. Be intentional, understand the trade-off, see opportunities, analyze businesses, think critically. Buying stock means buying a piece of a business. This is wealth creation's operating system. Install it in your mind. When it comes to investing, Warren Buffett, the Oracle of Omaha, offers deceptively simple yet profoundly powerful wisdom. Be fearful when others are greedy and greedy when others are fearful. This speaks to the importance of emotional discipline. Buffett's success is built on a long-term perspective. He famously said, "Our favorite holding period is forever." He invests in wonderful companies at fair prices and holds them for decades, letting the power of compounding work its magic. Another core tenet of Buffett's philosophy is to never invest in a business you cannot understand. He stays within his circle of competence. Start with what you know. Ultimately, Warren Buffett teaches us that successful investing is about having the right temperament, being rational, patient, and disciplined. While Warren Buffett represents tradition, innovators like Elon Musk and Mark Zuckerberg teach us about conviction and forward thinking. To see the future, you have to be constantly learning. Read about new technologies and understand shifting consumer behaviors. Conviction is the other side of this coin. You need the courage to act on your beliefs. Your investments might go down and people might tell you you've made a mistake. Have conviction to stick to your long-term strategy. It's about being adaptable. This blend of curiosity, conviction, and humility is a powerful asset for any investor. Many of us are raised with a scarcity mindset. We're taught that resources are limited, that we have to fight for our piece of the pie, and that there's never enough to go around. This way of thinking can be incredibly limiting, especially when it comes to money. It makes us fearful of taking risks, hesitant to invest, and focused on hoarding what little we have. To truly build wealth, you need to shift from this scarcity mindset to one of abundance. An abundance mindset is the belief that there is plenty of opportunity and wealth in the world, and that you are capable of creating and attracting it. This shift starts with your internal dialogue. Pay attention to the way you talk about money. Do you find yourself saying things like, "I can't afford that," or "I'll never be rich"? These phrases reinforce a reality of lack. Instead, try reframing your thoughts. Instead of "I can't afford that," ask, "How can I afford that?" This simple change transforms a dead end into a question that sparks creativity and problem solving. It opens your mind to new possibilities for earning, saving, and investing. Your beliefs shape your reality, and believing in abundance is the first step toward creating it. An abundance mindset also changes your relationship with risk. Someone with a scarcity mindset sees risk as a threat, a potential loss of their limited resources. Someone with an abundance mindset sees calculated risk as an opportunity for growth. They understand that not every investment will be a winner, but they believe that over the long term, the gains will far outweigh the losses. They are not afraid to invest their money because they trust in its ability to grow and in their own ability to generate more. This confidence allows them to take the necessary steps to build significant wealth over time. Finally, embracing abundance means seeing wealth not as a zero-sum game, but as a value creation process. The global economy is not a fixed pie where one person's gain is another's loss. When you invest in great companies, you are contributing to innovation, job creation, and progress that benefits society as a whole. Wealth is constantly being created. By adopting an abundance mindset, you give yourself permission to participate in that creation. You rewire your brain to see opportunities instead of obstacles, growth instead of loss, and potential instead of limitation. This is the ultimate mindset of wealth. Before you can tell your money where to go, you need to know where it's currently going. The first step in getting smart with your money is tracking your spending. For 1 month, commit to tracking every expense, including your morning coffee and online subscriptions. Use a notebook, spreadsheet, or budgeting app. This process is often eye-opening. Small leaks are often what sink a financial ship. This organized view is the true foundation of wealth. It's the first step to becoming the active architect of your future. Once you know where your money is going, it's time to create a budget. A budget isn't about restriction, it's about freedom. It empowers you to align your spending with your values and goals. A popular method is the 50-30-20 rule. 50% for needs, 30% for wants, and 20% for savings and investments. Adjust the percentages to fit your goals. Actively design your financial life. Review your budget regularly and adjust as needed. Make your budget your financial North Star, turning the dream of financial freedom into an achievable plan. Now that you have a budget, you can start making powerful, intentional choices about your spending. This is where you can truly accelerate your journey to wealth. It's not about depriving yourself of everything you enjoy. It's about identifying the low-impact expenses that you can cut without feeling much pain, and redirecting that money toward your high-impact goals. Think about the small, almost mindless purchases you make every day. That $5 latte, the $10 lunch, the monthly subscription to a service you never use. Individually, they seem insignificant, but together, they represent a huge opportunity for your future self. Let's do some simple math. Imagine you cut back on spending by just $10 a day. That could mean brewing your coffee at home, packing your lunch for work, or canceling a streaming service. $10 a day is $300 a month. That's $3,600 a year. If you were to invest that amount every year and earn an average market return, over 30 years it could grow to over $400,000. That's the power of small, consistent sacrifices. You are trading a little bit of immediate, minor pleasure for a massive, life-changing reward in the future. This concept is often called the latte factor, a term popularized by author David Bach. It highlights how small, recurring expenses can have a disproportionately large impact on your long-term wealth. The key is to be mindful and ask yourself, is this purchase bringing me more value than the financial freedom it could buy me later? Sometimes the answer will be yes, and that's perfectly fine. The goal isn't to eliminate all joy from your life. The goal is to eliminate mindless spending. It's about shifting from unconscious consumption to conscious allocation of your resources toward what you value most. Start by looking at the wants category of your budget. Challenge yourself to find 1 or 2 things you can reduce or eliminate. Could you switch from a premium gym membership to a more affordable one? Could you host a movie night at home instead of going to the theater? Every dollar you free up is another employee you can send out to work for you in your investment portfolio. This isn't about sacrifice in the negative sense, it's a positive trade. You are choosing to invest in your most important asset, your future. This discipline of intentional spending is a habit that pays the highest dividends of all. The single most effective strategy for sticking to your financial plan is automation. Human beings are creatures of habit, but also prone to procrastination and emotional decision-making. The real secret is to take yourself out of the equation as much as possible by setting up automatic systems. You build good financial habits right into your life, making sure your most important goals are funded consistently. This is how you pay yourself first. As soon as you get your paycheck, a portion is automatically transferred to savings and investments. You treat your future self as your most important bill. When the market is down, automation keeps you disciplined, allowing you to continue buying at lower prices. Automation turns you into a disciplined, consistent investor by default, the surest path to building wealth. Think of automation as setting your financial plan on autopilot. you can construct a financial system that runs itself, building an effortless, automated engine for wealth creation. You've got your budget in order. Now it's time for the exciting part, actually investing. When you hear the word investing, you probably think of the stock market. A stock represents a tiny piece of ownership in a public company. When you buy a share of a company like Apple or Amazon, you're literally becoming a part owner of that business. For a beginner, picking individual stocks can also be very risky. Most financial experts recommend index funds. An index fund is a type of investment that holds a collection of many different stocks, all bundled together into one easy-to-buy package. An index fund simply aims to match the performance of a major market index, like the S&P 500. When you buy a share of an S&P 500 index fund, you instantly become a part owner in all 500 of those companies. This approach immediately solves the problem of risk. You are essentially betting on the overall growth of the entire US economy. For beginners, this is the safest, simplest, and most effective way to start building wealth in the stock market. Index funds make investing simple. Don't hunt for the next big stock, just own the whole market. Instead of trying to pick winners, index funds buy every stock in an index, like the S&P 500. This guarantees you get the average market return, which most professionals can't beat over time. The process is passive, so fees are extremely low, meaning more of your money stays invested. When the S&P 500 goes up, so does your index fund. You own a piece of hundreds of top companies, all in one move. This approach is backed by legends like Warren Buffett, who recommends it for almost everyone. Index funds democratize investing. Anyone can start with just a few dollars. By owning the whole haystack, you avoid big mistakes and set yourself up for steady, long-term growth. It's the simplest, most reliable way to build wealth for the future. The best investors automate their investments and then leave them alone. Set up a recurring monthly investment into your index fund. This is called dollar-cost averaging. You'll buy more shares when prices are low, fewer when they're high, smoothing out your costs. Automation removes emotion and bad timing from the equation. You don't have to guess when to invest. The answer is always now, because it's on your schedule. When markets drop, you buy more. When they rise, you avoid overpaying. This system builds discipline and lets compound growth work its magic. Just set up automatic transfers and investments, then relax. Your wealth grows quietly in the background, no expertise required. Ready to invest? Here's how to start in 5 easy steps. Open a brokerage account online. Fidelity, Vanguard, or Schwab are great choices. Provide your basic info and link your bank account. Fund your account with any amount you're comfortable with. Search for an S&P 500 index fund, like VOO or FXAI, and click Buy. Congratulations, you're now an investor. Next, set up automatic monthly investments so you never have to think about it again. Don't stress about the details, just get started and let the system work for you. This simple process turns you from a saver into a part owner of the world's top companies. The key is consistency, not perfection. Start today, automate, and watch your wealth grow. Picking the right investing platform is easier than ever. Traditional brokerages like Fidelity, Vanguard, and Schwab offer stability, low fees, and great support, perfect for long-term investors. They're built for buy-and-hold strategies and have robust educational resources. Prefer a modern app-based experience? Robinhood and Webull make investing simple and accessible. These apps are user-friendly, but can encourage risky trading. Stick to your long-term plan. Choose a platform that matches your style: traditional for reliability, apps for convenience. All major platforms now offer commission-free trades and low-cost index funds. The best choice is the one you'll actually use and stick with. Focus on your goals, not the hype. The right platform is your launchpad. Pick one and get started. Want a totally hands-off approach? Try a robo-advisor. Robo-advisors like Betterment and Wealthfront build and manage a diversified portfolio for you, using smart algorithms. Just answer a few questions about your goals and risk tolerance. They handle the rest. They automatically reinvest dividends and rebalance your portfolio to keep you on track. You get professional management for a small fee, usually around 0.25% per year. It's the ultimate set-it-and-forget-it solution. No need to pick funds or worry about market swings. If you want simplicity and peace of mind, robo-advisors are a fantastic way to start. Let technology do the heavy lifting while you focus on living your life. Smart investing starts with knowing where your money goes. Budgeting and tracking apps like Mint, YNAB, and Empower connect all your accounts in one dashboard. They automatically categorize your spending and show you exactly where your money is going. Mint is great for easy tracking and budgeting with helpful charts. YNAB helps you give every dollar a job, breaking the paycheck-to-paycheck cycle. Empower, formerly Personal Capital, is perfect for tracking your investments and net worth as you grow. These tools make it easy to spot savings opportunities and stay on top of your goals. Use them alongside your investment accounts for a complete financial picture. With the right app, you can manage your past, present, and future all from your phone. Take control, track your progress, and build wealth with confidence. After planning and automating, your greatest challenge will be yourself. The biggest investing mistakes are emotional, driven by fear and greed. Greed surfaces when markets soar, tempting you to chase quick wins. Fear takes over when markets fall, triggering panic. Successful investing means doing the opposite of your instincts. Be disciplined when others are greedy, and brave when others are fearful. Your automated investments are your best defense. Trust your long-term plan, and remember short-term fluctuations are just noise. Zoom out and look at long-term charts. Volatility is normal, markets always recover. Taming your emotions is key to winning the investing game. In your investing journey, you'll be tempted by shortcuts to wealth. These speculative traps prey on impatience and greed, hyped by friends, social media, and sensational news. It could be penny stocks, new cryptocurrencies, or complex strategies promising guaranteed returns. Speculating is a short-term bet, not investing in a business. Avoid timing the market, nobody can do it consistently. Stick to your diversified, long-term strategy. Stay within your circle of competence and never invest in something you don't understand. Sustainable wealth is built over years of consistent, disciplined investing. Avoid speculation and stay the course. Successful investors often share surprisingly simple advice. They wish they had started earlier, understanding the power of time and compounding. Ignore the noise of constant financial news. They emphasize that fees matter a lot. Minimizing costs is one of the only things you can control in investing. Stay humble and keep learning. The best investors remain perpetual students. Embrace these lessons to avoid pitfalls and walk the path to financial success. We have covered a tremendous amount of ground together on this journey. We started by rewiring your mindset, shifting from a consumer to an owner. We laid the practical foundation, learning how to track our money and create a budget. This led us to the simple, powerful strategy of using low-cost index funds to build long-term wealth. You now have the complete blueprint, the knowledge, and the tools that have been proven to work. The single most important takeaway? Start now. The power of compounding interest needs time to work its magic. This is the beginning of your adventure. You have the power to build a life of freedom and abundance. Subscribe to our channel for daily tips and motivation. Thank you, and here's to your future success.